Well, the Yankees may draw crowds to their games, but they're not filling up all the parking lots in the Bronx. Muni bonds backed by parking lots and garages in the Bronx could default as early as next year, and that has hedge fund managers circling this debt. Jonathan Keehner wrote that story from Bloomberg, and he is here with me now. And Jonathan, tell us a bit about the background on this.
Sure. I guess this is probably one of the more high-profile examples we've seen, a phenomenon we've discussed here on this show many times, which is this idea of munis, particularly revenue bonds, really struggling. Just like everything else in the credit crisis, probably over-anticipated the amount of revenue they'd get, now in a lot of trouble. This is actually the parking facilities around the new Yankee Stadium, a little over 9,000 parking slots in there, and it's really underperforming based on the projections. They've already had to draw on reserves in order to make their payments, and as you said, these bonds trade, and there are actually hedge funds buying them up, circling it, just as you would see with a distressed corporate situation. In fact, the hedge funds we identified are ones that we more often see working in the corporate side. Monarch, Davidson Kempner, these are guys who do this activity a lot on the corporate side. So.
And why would they be attracted to this?
Well, there's a lot of different ways this could go. The folks that we spoke to said, look, at the moment, this facility, this is called Bronx Parking, the 240 million or so municipal bonds issued out of New York City's Industrial Development Agency. So typical revenue bonds. If they're unable to make a payment as soon as next year, which some of the folks we spoke to said is very likely or possible, from there, who knows, that they could be put into bankruptcy. The hedge funds and other creditors could take over operations. They could foreclose. It's possible they'd negotiate with the city, come up with some alternative uses for it. I think this is really uncharted waters. You've never seen this type of creditor base move in on a project like this.
And why is this happening? Because as we were pointing out earlier, I mean, attendance is actually up, right, at these games. So why are they finding it hard to get the revenue?
And again, I think you'd have to speak with really someone who's more of an expert on Yankee Stadium. But to my understanding, there's a lot of competition right now. They raised prices for parking, I think, by $12 up to $35 for parking, and there's a lot of available parking right there. There's also a lot of mass transit nearby. So I think the Yankees are obviously always a big draw in the city, but as far as the actual need to park at that facility, it seems that about 60% of the attendees are not feeling that they need to do that at the moment. So that's an issue.
And aside from the ones that you identified, I mean, are you hearing more about other hedge funds that are interested in this type of debt, or that they're moving out outside of their...
We quoted someone in the story named Lawrence Gottlieb, who runs a firm called Fundamental. Their group we've discussed on this show that took over the Memphis Redbirds, a AAA team, last year by buying the muni bonds. So increasingly seeing private equity hedge funds moving into the muni space, taking control of certain muni-backed assets, just as you would see in the corporate world, and likely a phenomenon we'll see more of going forward.
Okay. Jonathan, great to see you, as always.